The most convenient way to trade in the direction of the trend is by implementing a pullback trading strategy. Market pullbacks happen when price moves at least one bar against the dominant trend direction. Basically, a pullback is a price movement that moves in the opposite direction of the trend, but it's only a temporary price movement before it resumes back into the main trend direction. Pullbacks are sometimes referred to as price retracements or corrections. It doesn't matter what you call it, as long as the temporary counter-trend movement resumes in the main market direction later, and it does so by breaking beyond the recent price extreme. If price doesn't go beyond the recent extreme, then the pullback could reverse, or it could consolidate. A pullback can be shallow or deep, and it can be fast or slow. While the depth and speed of the pullback are independent of each other, they are often influenced by the market drivers at that point in time, and no one really knows when any of them happens. As traders, instead of trying to predict the future, it's more useful to recognize these pullbacks and then perform your analysis based on how these pullbacks behave. Remember that trading is about stacking up the probabilities in your favor, and this is exactly what we are trying to achieve here. By recognizing the various types of pullbacks, you can pick trades that have a higher probability of succeeding. Once you have the probabilities in our favor, we can take the trade. So to keep it simple and organized, I have grouped market pullbacks into distinct groups, simple and complex pullbacks, and each group will have its particular chart patterns and characteristics. So let's discuss each of them. First, simple pullbacks. A simple pullback should be in the shape of an ABCD pattern. Hence, they are usually fairly obvious and easy to spot, while complex pullbacks might take a little longer to form. However, a simple pullback can remain simple, or it can evolve to become a complex pullback as well. Since we don't know when that happens, it's important to manage your risk and money wisely. If you find yourself spending too much time looking for a simple pullback, it's probably because they are either complex ones or they are not pullbacks at all. Either way, when that happens, you should just ignore it and look for trading opportunities elsewhere. Now, a simple pullback can be deep or shallow, and it can be sharp or flat. Let's start by having a look at a deep pullback. This is probably the easiest price pattern to spot. In a deep pullback, the price moves a significant distance against the dominant market direction. It can happen quickly or it can happen slowly. In other words, it can also be a sharp pullback, even if it's a deep one. It's usually made up of a few consecutive seller or buyer bars, with one or two bars that are relatively longer than the rest. However, the key is the distance traveled, as opposed to the type of the bar. In this other example of a deep pullback, the bears are trying to show their dominance on the market. However, the bulls are still strong and usually come back into the market just before the bears manage to build confidence. Next we have shallow pullbacks. The pullback moves very little against the dominant trend direction. It can happen quickly or it can happen slowly. It can also be a flat pullback if it turns out to be a sideways movement. It usually comprises of a mixture of dojis and small-bodied bars. Sometimes you can also expect to see long-tailed bars. The type of bar you get in a pullback is less important, as it's the movement of the bars that matters. A shallow pullback is usually an indication that the market is one-sided. If you read the price action in this example, we see that bears only managed to push price slightly in their favor, as the bulls were already back in the market. Hence, price is expected to move relatively far after the pullback. Next we have the sharp pullback. This is usually a very quick pullback, and the speed of the pullback is the key identifier. Although a sharp pullback is typically made up of only one or two bars, it can also happen when we have multiple bars. But there is a clear counter-trend movement within a relatively short span of time. The sharp pullback can be considered a deep pullback, but having said that, you can occasionally find a sharp pullback that is relatively shallow. The price action in this example showed some selling strength initially. With such a strong bear trend bar, the sellers were hoping to attract more sellers into the market, but only realized that the buyers were still in control, and as a result, that push did not go far. Next is the flat pullback. A flat pullback is considered a shallow pullback. However, it's slightly more extreme than your typical shallow pullback because the market only moves sideways, with very little counter-trend movement. before it resumes back in the dominant trend direction. The sideways movement is the key identifier for this pullback. A flat pullback is an indication of a very strong market. Based on the price action in this chart, buyers often fail to find a good long entry into the dominant trend direction because the price barely retraces. Many waited for a minor reversal to show confirmation that price is correcting itself. Unfortunately, due to big players driving the market, price continued its bull run before traders even realized it. Now let's discuss the patterns of complex pullbacks. First pattern is the rising or falling wedge. A rising wedge occurs when you have price action pullback that is sloping upwards when in a downward trending market. Meanwhile, the price range of the pullback becomes narrower as it goes against the dominant trend direction. When price makes a pullback, you can eventually spot an upper resistance line on the top and a lower support line at the bottom. Both lines converge as price action becomes narrower. As the wedge starts to narrow, this is an indication that the market is becoming more indecisive. As investors see this, they would also begin to sit out of the market. This becomes a self-fulfilling prophecy as the wedge continues to narrow even more. Price gets squeezed to the point where it has no choice but to burst out with momentum. In a rising wedge, the pullback ends where price breaks below the lower support line, and vice versa for a falling wedge. Second pattern is the rising and falling flag. A rising or falling flag is very similar to a rising and falling wedge, with the exception that the price range stays consistent as price moves against the dominant trend direction. In other words, the upper resistance line and the lower support line are parallel to each other, creating a small price channel. Just like the rising or falling wedge, the pullback ends as soon as price breaks out of the channel towards the dominant trend direction. Occasionally, price would continue in the new direction against the dominant trend direction and making it a reversal pattern instead of a pullback. Next we have the ascending and descending triangles. An ascending triangle pullback was formed when there was a relatively strong horizontal upper resistance line that was holding price from going higher. Each time price hits that line, it drops. However, each time it drops, the fall weakens. Thus, it starts making higher lows, and like a wedge, price starts to converge. From a market psychology point of view, this seems to suggest that there are large sell orders placed at a fixed price, where the horizontal upper resistance line is located. Each time the buyers push price to that line, the price drops. This continues for a while, and once there weren't any more sellers, price pushed higher. The opposite is true for a descending triangle. Ascending and descending triangles are one of the more attractive patterns to trade. Since price only moves towards the dominant trend direction, the extremes are not retested. However, the problem, like all other complex pullbacks, is that you don't know what to expect until it happens. Sometimes you may find price breaking out of the triangle where it goes against the dominant trend direction. Thus, this becomes a reversal pattern instead of a pullback. Next pattern, pennant pullbacks. The pennant is similar to a symmetrical triangle. It has a sloping upper resistance line and a sloping lower support line, and both these lines converge to form a triangle. Just like the wedge, buyers and sellers are consolidating, and the consolidation causes price to funnel towards an equilibrium point. Typically, price would start moving again before it reaches the extreme tip of the triangle. Pennants are nice to look at in hindsight. However, it's challenging to pinpoint where price would resume back into the dominant trend direction again. Like the other triangles, it's not surprising if this turns out to be a reversal pattern. Fifth pattern, the widening wedge. A widening wedge happens when the upper resistance line and the lower support line diverge. While price looks like it's potentially forming a simple pullback, price would start to swing vigorously on both ends. The buyers and sellers are definitely in a clear battle, unlike previous converging pullbacks, where buyers and sellers set aside to wait for further confirmation. Buyers would push price higher, but stronger sellers would take over as soon as it reaches a higher price. The buyers came in again as soon as price moves lower and pushed price even higher in the next round. The process repeats itself until a clear winner emerges. As you can imagine, a widening wedge is one of the more complex pullbacks, and it's where most new traders often get trapped. All of the patterns explained are useful technical indicators which can help you to understand how and why an asset's price moved in a certain way. The first and most important step is learning to recognize each pattern. In future videos, we'll go one step further, and I will share how to enter a trade after you recognized the correct pattern and the pullback type. As always, if you learned something new and found value, leave us a like to show support, subscribe to our channel, and hit the bell icon to stay notified when we upload new videos. Until next time.